Hey guys, what's up? Welcome to a brand new video. I have a quick breakdown video of yesterday's trading session, so let's get into it. So guys, my London session was not going that great. I was trying to catch shorts around here, but I got stopped out due to impatience. Then I just went on with the day and I had a coaching call, and after that coaching call, I was like, yo, let me check the markets. Let me just quickly check the markets and then just go record some videos. Well, that recording videos never happened because I just got so caught up in the markets and I was in such a focus mode that I got some beautiful counter trends. So let's get over them now. Okay, of course, first of all, I always mark up my charts with the fair value gaps in it. Then we came to the New York session. As you can see, it is already 3 p.m. around here. So I think this is 9 a.m. New York open or 10 a.m. something like that, and we filled a 1 minute fair value gap that was around here. We filled this 1 minute fair value gap. As you can see, all the others were filled, and this one wasn't too deep of a discount, but all the others were filled, unless for this one. So I was watching the markets and I saw a huge reaction coming out of this. So I knew, okay, right now we are starting a pullback to go back down from there, or we are just continuing our overall long trend. So then I was searching for points in the markets where I could go short potentially. And first I took a trade on EU short, and that was around here because I took my position like this. So this was a fair value gap on the 1 minute that was not being filled. So like, okay, if price comes here, I will go down. That didn't work out, obviously. So then I was like, okay, I must have the wrong range. It's not counted from here. They want a discount all the way up from here. And this is the 50 that I already drew on. So why from here, you might ask? As you can see right here, we have that head and shoulders formation, and then we went straight down. We didn't have any retracements whatsoever. Yeah, a consolidation zone like this, but this wasn't a major retracement. So we need to have a major retracement on this particular setup. So let's go to the 5 minute actually, because I was just monitoring on the 5 minute right now, and I saw this fair value gap that has not been filled right here. Like I said in my previous video, I want to see a fair value gap filled in my optimal trade entry or just above it. Above, everything was filled, so that left us with these two, and this is one fair value gap in general if you take it like this, but I specified it down to here. Why did I do this? This also was overlaid with this order block, this bearish order block, because price came into this point and it shooted immediately down. So there was a double confirmation around here for me. So I knew if price is going to come in here, it is going to react. It is going to shoot the markets down. And I'm not saying it's going to shoot it down till here where I took it, or maybe till this lows, or even till here. I just know that it's going to go down from here. So I take my trades, I put my stops above the first candle's high that forms the fair value gap, and bam, we get tapped in by the T, and we shoot actually straight down. This trade only took me like 50 minutes and just shoot straight down. Then an interesting way, I was obviously done trading right here, but here was another fair value gap, 5 minutes, where you could have entered. This was also in your optimal trade entry. As you can see, optimal trade entry. This already goes actually a bit above it, but let's see if we go to the 1 minute, maybe we can narrow it down a bit. Yeah, on the 2 minute actually. So on the 2 minute, you have a fair value gap that is in your optimal trade entry. So this will be your entry long. But I was on trading, obviously. That was not the only trade that I took. This was, by the way, good for a 2.7 R trade. I also took GU. Again, same scenario. Let's go to the 15 minutes, clarify things. So I was watching GU on the 15 minute, and as you can see, clear as day, we didn't have a retracement at all. So even though if we were going short or if we were going long, we need to have a retracement around here. And like I said, this is our optimal trade entry. This is our 50-minute fair value gap. So that's why I took the trade right here. I posted this trade, by the way, on my Instagram, and some of you guys said I was anticipating the move by taking it right here and not waiting for confirmation. Yes, that's true, but that's why I took like a 15 pip stop loss on this one and the 30 pip TP. That's more than I normally do. Normally I do like between 5 and 10 stop loss. But I was not just randomly anticipating that it would go short from here. This was a place where if price would fill this, there would be an immediate reaction out of this. It is the same with this again. You have this fair value gap right here. If price comes in here, it will react. Even though we are going short after that, maybe, it will still do this and then go short after that. There are just some places where price will react off, even though it goes in the right direction afterwards. So that was my trade ID. But then I was not done for the day. I was like, let us capitalize on GU as much as possible. GU has made some losses for me this week. and I'm not accepting it. I'm not taking it. So one of my rules for scaling in is that only take the trade if it is a valid trade ID on itself. So we go to the 1 minute, we have this reaction of this 15-minute zone. So I know, okay, we're going short from here. We take out these lows right here and we create a new lower high. So we have a change of character. This new lower high is inside of this 1 minute fair value gap. 1 minute fair value gap, that's what my entry is. I put my stops above the first candle of the fair value gap. It should actually be something like this, but I did give it more room, I think, to breathe because it was a really tight space right here. I put those stops of this one underneath this wick. That was right here, and I just let it run. Then when I saw this one running again and broke these lows again, create a new lower high again, create a new lower low again, I was like, okay, so we're going short, but we can take a retracement of this leg now. So this leg, you measure it right here. You have a fair value gap here and here. But right now, you need to realize I have EU open, I have GU position 1 open, and I have GU position 2 open. So what am I going to do? I'm only going to take the highest risk to reward trade that I can possibly get. So I'm only going to take the highest fair value gap that is in this price leg. So that is this one. I put my stops above the candle that forms the fair value gap. I put my take profit on the New York midnight open, and that was my trade, like that. And then as you can see, it was a fair value gap underneath this one. I didn't catch that. I also didn't notice that a fair value gap was around here. So I just closed it on the New York midnight open because I knew this could give a reaction around this price. But if I've seen this fair value gap, I would have put my take profit on this fair value gap. And this trade was, by the way, good for a 2R, 2.8R, and a 3R trade. So this was a really good ending of the week for me. A really good Friday afternoon session, and it was perfect to end the week. Guys, if you enjoyed this video, don't forget to leave a like down below. Don't forget to subscribe if you're new to the channel. If you have any questions, comments, leave it down in the comments down below. And I will see you in the next one. Bye bye, guys.